So you're newer to trading options, and you've heard that if you sell a put option, you can collect some cash. You do it, and suddenly, boom, your option is gone, and now you own 100 shares of some stock that you didn't even want. It's the end of the world, or is it? Let's break down exactly what just happened. Bottom line, what just transpired, it is called being assigned. Now, understanding options assignment is crucial as an options trader because it can significantly impact your trading strategy and your overall profitability. In this video, we're going to discuss what options assignment is, what it means for you as a trader, and how you can potentially use it to your advantage. So what exactly is options assignment? So as we get into exactly what options assignment is, I want you to understand something. We're only discussing selling puts here. We're not going to be discussing other option strategies. This is just when you go ahead and sell a naked put. So when you sell a put option, you are essentially taking a bullish position on the stock and selling a put to collect premium. By doing so, you take on an obligation to buy the underlying stock at the strike price if the option buyer decides to exercise their right. This is known as the assignment. Now the big question, when does options assignment typically happen? In American style options, which is where all stocks are, they're American style options, assignment can happen anytime from the second you enter that trade right up until 4 p.m. Eastern time on expiration day. That's a risk you take when you're trading naked puts. However, it's more common to be exercised when the option is in the money or closer to the expiration. A European style option tends to happen mostly on index options and can only be exercised on expiration day. So what do you do if you sold the put option and it gets assigned? There are a few things that can happen. First, if you have the necessary funds in your account, your broker will typically use those to buy the underlying stock at the strike price. Boom! Now you own 100 shares of the underlying stock. Second, let's say you don't have the necessary funds. You might face a margin call. If this happens, your broker may request that you deposit more money into your account, or they might liquidate other positions in your account to meet the obligation. To avoid these scenarios, it's critical that you closely monitor your open positions, especially as they near expiration. If you're short a put option that is in the money and you want to dodge the obligation, you can consider buying it back to close that position. For example, let's say you have enough funds in your account, so now you own 100 shares of stock. So basically, the way it works today is if your option has 1 penny of cash value, 1 penny in the money on expiration day, you are guaranteed you will be exercised on that position. If you are at the money, you sold a $55 strike and the stock closes right at 55 at 4 p.m., you might be exercised. So now let's take all of this and try to tie it together. There's a strategy called Wheel of Fortune. It basically starts off with you sell a naked put, you get exercised, you take that stock and you write a covered call. The stock goes up, they take the stock away from you, they give you cash. You sell a naked put, you take the cash, you write a covered call, they take the stock away. See where I'm going with this? It just goes round and round and round. Remember, being assigned isn't always a bad outcome. If you're selling naked puts, assignment means you get to buy the stock that you were bullish on at a lower price than the stock is currently trading at, and they paid you a premium for it. The key is to understand that there is a risk that you take on, and you need to have a plan in place if it does happen. You can even make a profit. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Go ahead and click right here for another one of our great trainings.